We'll start the session now by a quick introduction about Sukoon Unlimited, and then we'll open the floor to Rachna and Shrikant sir. Sukoon Unlimited is a community of senior citizens across the country. We pride ourselves in being for seniors by seniors. This entire community is about seniors coming up and taking care of each other. They come together to enjoy, connect, share, learn, and support each other whenever it is needed. There are four types of happiness or well being that the community provides to each other. The first is emotional well being, where any senior who's part of the community feels that they need to talk to somebody, they want to support, they just need a leaning shoulder. Other seniors who are known as Sathis, Shrikant sir is one of the Sathi here. Other seniors known as Sathis who have been handpicked by us are always available for any senior to reach out and talk to them. You can talk to them about life experiences, life in general, your daily routine, any worries or stress that you're carrying, family, relationships, news, whatever that you want, but they're always available for you to talk to them. The second area that we focus on is financial well being, where we encourage the community members to proactively take care of their assets and finances. And this session today is in spirit of creating more awareness about the importance of financial planning and savings. The third area that the community does for each other is mental well-being. Community members who are certified counselors and coaches are always available for the community members to speak to them and get confidential support whenever needed, either in a one on one setting or a group setting. And the last thing we do is make sure that the community is having fun. So we arrange multiple group events in a month for the community to meet, get to know each other, and build new friendships. All details about Sukoon Unlimited and what we do are available on the website and the contact details that's mentioned in the background of Sarthi Shrikant. You'll see there's a QR code there. If you scan that, that opens the website and all details of the community is available there. Uh, Moving to today's session, today is a very special session that's going to talk about good strategies to optimize your returns from investments and how to save better. We have Rachna, director from Right Horizons, with us. She is a very special human being, and we can't thank her enough for doing this session for Sukoon community members. And co hosting this event with her is Sarthi Shrikant. Sarthi Shrikant is the financial expert at Sukoon Unlimited. And if any senior member in the community have any questions about anything related to finance, investments, retirement planning, insurance, Sarthi Shrikant is available almost every day of the week for them to pick up a phone and speak to. With this, over to you, Rachna and Shrikant sir. Thank you.
Yeah. Thank you. Thank you,
Hello.
Vibha. I think the sir will take it. Yeah, I'll be happy.
Uh, so I'm starting now. Hello, my dear retired and retiring friends. Namaste. Very happy good morning. I am Sartesh Srikanth from Nashik, retired divisional manager of LIC of India. Today we are going to discuss very interesting topic. The topic is secure, worry-free retirement with small savings. I welcome Mrs. Ratna Rego, Director of Right Horizons Financial Services. So we will discuss some 8 9 very important topics or 8 9 important points. First point is optimal investment strategy. Young earners have the time to make up their early mistakes. They have a long earning period ahead of them, which can turn out to be more prosperous. However, the ability of experimental with money runs out when we retire because we don't have the time to correct mistakes and make up for wrong decisions. We have to follow a rule based approach about the corpus that we have accumulated over the years. Now here is my question for Rachna ma'am. What is the best way to invest in my retirement corpus, given that most participants are actively looking for ways to grow their retirement savings? What would you say is the best approach to investing a retirement corpus to generate steady returns without too much risk? Yes, ma'am.
Thank you. Thanks a lot. So when you were talking, I was just thinking because this is a very common myth I felt. So to just give my little bit more background, my dad was in army, and he has a very good. I always tell him that your pension is better than your actually income, and I go for the Union Bank for retirement. Just they call it pre-retirement financial planning, so I go for that session. It is a 5 day session for them anyway. It's a longer session to do the exercise also. So the question comes is, okay, how much I am having and how much monthly I should have it. So this question I want all of you. So I will ask few questions. It's better you write it. And my thought is I'm just giving you a thought. So I have because everybody is unique and your lifestyle is unique. Today morning only I was debating with my brother. He's come from US that a person who was having so much he looks so good top to bottom with the branded item you can think of he's wearing. He has a Merc and Benz car. I used to think that he was having a very rich, and he came to me and he's saying that Rachna, I have the problem and I don't have, otherwise my car and house will go. And I'm very surprised. And I was telling, why the hell you spend it so much on all these big cars and the big brand? Your each, even the belt of what you use is around 2 lakhs belt. So there is a lot of difference when is risky or not risky. So I'm just trying to tell you these stories because you will able to see lot of time people comes and tell me, okay, my cousin relative, this has been asking, I can give them money. I always says one is try to find how much money you need per month. Okay. On an average 10,000, 20,000, 30,000, depending on the lifestyle. Everybody's lifestyles are different. Make sure that amount is safe. So people will say, okay, bank is safe. There is no point. 99% people will prefer bank. Coincidentally, yesterday I was writing a article on LinkedIn that Axis Bank guy, who is a branch manager itself, has having a 97 crore. He took it away money. So to believe bank or not bank, that's a different story. But I'm trying to say, put that much of money whenever you want, where you are sure. It can be bank FDs, it can be your bonds, which is government bonds. I'm trying to say you can have the MIS, go GPO kind of it. Government things, which I'm 100% sure it is 99.9% safe kind of it. But whenever you invest, try to understand two things. One is what is the tax limit. If you are in 20% tax or 30% tax, accordingly you try to take care of those limit. So answer to short term to long term is different. Answer is where to invest, secured place, which is mandatory required every month. If you have a surplus, then you can go for a risky or a long term basis. Make sure see post tax. That is my overall level. And don't invest what you don't understand. It's okay to have 2% less, but have a better sleep. Yeah, I think so. I answered very soon. Or
Yes.
anything else I wanted, I can be added.
नहीं, थैंक यू रत्ना जी। और दोस्तों, अगर आपको कुछ मन में सवाल आते हैं, क्वेश्चन आते हैं, तो चैट बॉक्स में लिखिए और एंड में उस सब सवालों का जवाब भी दे देंगे। अभी मैं आपको एक स्टोरी सुनाता हूँ। My one friend Rajesh retired and was enjoying spending time with his grandson. But unfortunately, a year ago, Rajesh had an accident and had to be hospitalized for his injuries. The small amount of money Rajesh had saved for his retirement had to be spent in paying the hospital bill and wiped out his only source of income, leaving Rajesh dependent on his son for his remainder of his life. our vulnerability to illness and disease increases as we grow older. We become more vulnerable. So, healthcare concerns were a big worry for many of us. What are Here's my question to madam is that what are some smart strategies to ensure we can cover medical expenses during retirement, especially as healthcare costs continue to rise?
Yeah, it's a very, very good question. And as I told you, because my dad was 82, mom was 76, so I'm just giving example of those and my own customers, everything. Health is wealth. This has been told by many people, and that is so true. So one thing what I have realized it, apart from an health cover, try to make sure you being inactive. So my daughter is gone to Singapore for a higher education, and she's there and she's working. So I was there with her to set up, and of course for graduation. And then I saw there is a lot of difference there. People above 75 age was working in the all the malls and other things. So I asked a few people who have been in Singapore for so long. They says no, the cost is higher and other things. But the good news is there is most of the senior citizen or the people there, they go for early morning walk for 2 hours and evening 2 hours. Their average age living is 94. And I was telling that's so amazing. Their average age is there because we keep moving. So apart from your health, the best health is two. One is you keep yourself happy. It so I keep thinking, and today my brother reminded me again, the person who can make you most happy is your own mirror, nobody else. It means yourself. It's नहीं कि मेरी daughter-in-law, brother-in-law, father-in-law, son-in-law, or my son, kids, or somebody will do something and I'll feel happy. Actually, nothing. So you have to be happy. Second thing is you have to keep having a physical fitness wherever you are to walk. Nothing more because we walk and society it works. So that's a passive way of health. But good news is what I say, all of you may have it. First is nowadays health insurance is given till 75. So please take it. Previously it was not so easy. Now they are giving. Second thing is if any of your kids are in a corporate, they can pay little extra premium, but they can take on a dependent parents. That is the best thing because existing disease is also considered from the day one. So that is the one reason I always says ask your daughter, son, daughter-in-laws if in their office they can take a corporate for the parents or parents-in-law. So that is the second point. Third point is whenever you take in health cover, nowadays it's very, very critical. Nowadays 10 lakhs, I think so after COVID, people started realizing 10 lakhs is not enough. I recommend always a top up. So nowadays top up is like you take a 10 lakhs and top up of 40 lakhs, which is very minute money, 2000, 5000 bucks for a top up, which will required in case if you want. And make sure whenever you do health cover, three things to look at. Of course, one is premium. Second is what is the slab. People don't see the slab. They will say, okay, I've taken 50 lakhs cover. Somebody came and told me, Rachna, I've taken 50 lakhs cover, but I have to pay 2.5 lakhs. I said, kya ho gaya? No, the limit for, like, for example, ICU is only 5,000, but my ICU was 1,000 bucks, 10,000 rupees per day there. They have a limit of only five doctors can visit, but number of doctors you are not in hand. The room rent limit is only 3,000, but where I nowadays I keep teasing everybody that hospital, at least in Bangalore, I know it's a more costly than five-star hotel. I keep teasing. Five-star hotel, you get it around 8 to 10,000 rupees per room, but in any of the Apollo hotels, you get 15,000 rupees. So try to look room rent, ICU, pre and post, those things when you are taking a health cover. If you don't have it, still apply it. It is okay to start sometime because first 3 years you may not have, or 2 years you don't have a pre-existing disease covered, but at least after that it will be covered. Yeah.
Thank you, Ratnaji. Next question is regarding tax. We have seen that tax saving strategies are in everyone's mind. Can you walk us through the best tax saving options available for seniors in India and how to take full advantage of them? What tax saving options are available for seniors in India under old and new tax regime?
Yeah. So, so you have told the best answer because nowadays, anyone who has been going for tax filing, I always tell them to calculate both. But I'm assuming none of you will have a home loan now. Whenever I have calculated more than 300 people, in a year we do tax file for 300. If it is a home loan, then it is make sure that old regime is a beneficial.
Yes.
Otherwise, 99.9% it will be a beneficial is only new regime of it. But I want all of you to start thinking that PF PPF gives you 7.1% return tax free. But these are lock in. I want you to decide how much money you wanted to keep with you, use with you, and then go for the next succession. There is no point in giving 7.5 or 7.1% tax free, but you are not able to use when you want. So, importance for your money should be always when we are above 60%. Make sure your 60 to 70% of the money is liquidity is there. That is more important than risk. People are not realizing. मुझे last week somebody person came from my webinar and said, Rachna, I'm 75. I have three sites, LIC, PF, PPF. मेरे पास 10 लाख भी नहीं है मेरे पास, but net worth is 7 crore. What person will do with the 7 crore when I can't, if I can't have a 10 lakhs with me? Start thinking of that. If I need a money, how fast I can get at least 50% of that money. There is no point in having a 10 houses और मेरा rental आ रहा है, मेरा वो आ रहा है. अभी उसको बेचने जाओगे तो एटलीस्ट 6 महीने लगेगा. So please think of liquidity more important than a risk. मेक श्योर मिनिमम 50%. यदि आपके पास 1 करोड़ पैसा है टोटल नेटवर्थ मतलब कि हाउस, योर ओन एफडीज, इंश्योरेंस का पैसा, पीएफ पीपीएफ, बैंक में सब मिला के अदर देन द लोन्स 1 करोड़ है तो एटलीस्ट 50 लाख कभी भी हम चाहें तो निकाल सके मिनिमम. दैट्स वेरी वेरी इंपॉर्टेंट. थैंक यू.
Yeah, Rachna madam, I had a question,
या
which
प्लीज.
is that your husband, Anil Rigo, does he come on money control?
या ही इज अ फंड
Oh,
मैनेजर.
oh. Because I see Right Horizons there also. I was
या
wondering whether there's any link.
good
Thank you.
bad ugly world is small.
Madam, can I ask Gurunath
Yeah,
Reddy
please,
speaking?
anytime. Happy to ask. Yeah.
Uh, okay, it was very nice, and you brought out a lot of things which we are learning.
Me, sir.
Yeah, Madam, like you are saying that you give an example of 1 crore. If you have at least 50 lakhs, you should be able to take out at any given stage. Means you should be able to easily think.
Liquidate. Yeah.
So liquidate. The other side, you have told government bonds are also there. You have told NPS also there. A lot of things you have told. So if it is there in the bank will not give the money. That is my question.
Pardon?
If the liquid money is there, if the fixed deposits are there in the bank, when we want them, when we want to cancel them, will they not give us? Am I audible?
Yeah, it's breaking. But what I understood you are saying, if you are in a bank, it will be, yes, you can remove. See, what you can remove if remove means which is a financial assets. Financial asset is what your FD,
Yes.
SB account, mutual funds, stocks, listed bonds. You can redeem anytime. Okay. What you can't redeem if you have a PF, PPF, real estate, LIC, which is locked in, it's not matured. Those you can't remove. Am I answered your query?
Yes, it's correct. But 50, how come that figure of 50% has come? That is my question. You told at least
So
50% of
actually, it is not 50%. It is supposed to be 100 minus a age, but people have a lot of real estate. So I said, at least keep 50%. Okay. So your debt and equity ratio should be 100 minus age. Okay. So if I'm actually 50, so for me it is 50% equity, 50% debt. Okay. So debt means it can be gold, it can be real estate, it can be FDs, anything which is low risk. Okay. That's what my thought is. 50, you can keep 50 is a minimum. You can take more, but I'm saying at least keep 50 because most of the people who I have seen,
Morning,
they don't have more
ma'am
than
and
50.
sir, Srikanth also. Can I have ask a question? Actually, I just posted also.
Okay. Yeah, please.
So my one friend is Mr. Bhavsar. He has recently retired at 60. He received a large sum of rupees 1.15 crores as retirement benefit. He received a leave encashment, gratuity, then provident fund, commutation of his pension value. So total corpus is about 1 lakh, 1.15 lakh or 115 lakh, 1.15 crore. He intends to receive regular income to live a comfortable life. He has a need for income from investment in immediate term, but the same must also continue for long and uncertain period as the income is required for life. Interest rates on FDs, means that is fixed deposit, may fall any time in future. Previously also the interest rate reduced. So my question is, how can seniors ensure a reliable income stream during retirement, and what are some of the best financial tools or strategies to keep income consistent over the year for whole life?
So I'll give an example as a Rachna or an as a wealth manager both. Okay. So most of the time when somebody comes and tell me I have 1 CR or 2 CR, so first question I always ask, how much is your monthly need? So I didn't know the person who has asked the question. If they don't mind, can you tell me how much is the personal monthly need?
You want his requirement, no?
Yeah,
Requirement of
monthly
monthly income 60,000.
60,000. So that's fair enough. So I was just trying to understand if somebody has a 1.15 and let us say taking as a 6.5 on an average returns, I'm thinking. Okay. You should be able to take easily 60,000 rupees, but what we do it in the right horizons, we call alliance fund, which is called the hybrid funds. Because I have another two, three people who are in 60s to 80s people, they have never done other than FDs. So, and they had a very big corpus, means 20, 30 crore kind of corpus. This is Ashna, my need is only 30,000, 50,000 rupees, and my tax is coming so high. So what I always tell them is, first of all, how much money you require for your retirement surplus, keep that aside. Contingency, at least 5 lakhs to 7 lakhs aside. And the rest you keep it for the equity which you can gain. You can give for a charity, you can give for your kids, you can give to your grandkids or go for vacation, whatever it can.
Madam
So that
Rashna,
is,
can I interrupt if you don't mind?
yeah, please.
A very related question, actually, very related to what you're speaking. See, I'm almost 16 now. What should be my debt to equity ratio? How much debt and how much equity?
So that's why I sir told you that I don't know the corpus. If as per the corpus, if your corpus is just taking care of your monthly, you should be 70-30. 70 is in debt and 30 is equity. Okay. But if somebody's corpus is higher, which I was giving example, so I have kept that person's 4 crore separately and the rest all the money for the equity side more because she wants to give as a will because I'm a will executor and witness also for a trust and she wants to give it to the niece nephew. She doesn't have a kids. So I am trying to say most of the time we try to understand how much is a corpus. And according to the corpus, we keep it 70-30 for all the people that much money required. 30% actually takes care of your FD plus and tax efficient. There's nothing wrong in FD, but only you should look at tax efficiency. So FD plus in tax efficiency, capital protection almost comes over a 3 to 4 years. There's no problem. Is it I answered your query, sir?
Yes.
Yes,
Next
thank
worry is
you.
next
Yes, sir.
worry is about inflation.
That's what I'm
Inflation is
saying.
inflation is the biggest killer when it comes to routine spending in retirement. As per the CPI, that is Consumer Price Index, India's average inflation rate is around 5%. But when we factor in lifestyle inflation, figures jump to 10%. Lifestyle, what is lifestyle inflation? It is tendency to spend more, adjust spending habits to match their new income level, leading to a higher standard of living. Farmer luxuries become perceived necessities. For example, 5G, smartphone, scooty, car, etc. These all things are now becoming necessities. So my question is that with inflation being a common concern, how can seniors safeguard their savings and investment so that their money doesn't lose value over time?
So I answered the same thing. We have a fund, but if somebody doesn't want, they can do 70% of debt mutual fund and 30% in a equity
Okay.
mutual funds. The 30% actually takes care of inflation and the
Yes, sir.
taxation, and your 70% takes care of people are been saying trending of that SWP
Regular
and
income.
all no systematic withdrawal plan kind of it that is being taken care of. So that's a normal norm. So, but people will say, Rachna, you will take five mutual fund here, five mutual fund there instead of you give me the fund. So we have it in our PMS. It's called Alliance Fund because PMS is only allowed because 50 lakhs. But the same thing we can do it in mutual fund also, the same things 30 and 70. And SWP, we keep continuing and getting across. On a overall levels, your market 30% will take care of your inflation.
Then next point is about budgeting. We must plan for about 30 years. Means we are our average age is around 60, 64, and we may survive up to 90 by God's grace. So, but my different friend have different opinion.
Okay.
Mr. Rao, one of my friend, take fragility. Fragility means he focus more on saving. He cut short his expenses right at the start of his retirement. Another Mr. Ghatpande spent well initially and then cut back severely. And my opinion, I prefer not think too much about it and go through a yo-yo. Many of us are trying to figure out how to live comfortably in retirement without compromising the quality of life. So, how question is, how do you recommend creating a realistic budget that matches our needs and lifestyle goals?
So back to square one question of the budget. So I don't know all of you write sir or not. My mom till the last day she was writing budget. I write every day budget what I spend on income. My kids 17 and 23 they still write. Okay. So first point what I keep telling people is write. When you start writing your expense you will know where you are spending. And half of the time I can tell you your self analyzing only will save it. But too much saving or not saving is also not so good because lifestyle cannot change. What we have a lifestyle previously, now the same thing. You can't make more spending more or you can do less spending. So first point is what is a number of years I should take? That is actually as on today we says it's a biological age people normally find if it is a normal death. Easiest way is to look your mother side whoever lived the longest. Okay. So mother side like in Nani, Nana side and all the stuff if they have a natural death is on we take cash flow till 85 but I have three customers who have taken till 95 and 100 even my mother-in-law side everybody has been staying till 95 to 97 years okay so I'm trying to say the easiest way to take cash flow longevity we call word is your mom's side anybody natural death. That's the first point. Second point is what you are spending now without a loan before retirement. That is your lifestyle. But make sure that you have all that money till your even if you live till 100 years. Then you can decide whoever you wanted to give. Okay. So I have a very funny, this one, what you call story, which I remembered. So I'll just tell you. My mom, we are also from middle class and all, and I don't spend, I don't like spending much. I'm also very confused kind of it. But because I get a feet pain, I get a very nice slippers now. So that time the Crocs slippers used to come around 4,000 to 5,000 rupees. So first time I went and my mom said कि 5,000 ऐसे बेकार कर दिया, 5 चप्पल आ जाती, तुम एक ही चप्पल ले आई हो. So my daughter says that see your mother is scolding still now. So I feel we are the one place where my kids also scold and my mother also scold. Okay. So I said my mummy, no, it's very good and all. Heel is nice. I will not get pain. So next time I got the other slippers. And then I remember that I got the scolding with my mom. So I didn't wanted to get scolding. And I said this time, मम्मी ये 600 रुपए की चप्पल है. और फिर मेरी मम्मी ने बोला ठीक है 600 तो बड़ी सस्ते थे मेरे लिए दो चार ले आना. Then I was got caught because actually the slipper was 5K. So I always say the mom is mom. They know how to take care of us. So that's the one thing I always felt. Be happy wherever you can save. You please save. Don't over save. Nobody is going to remember. They will remember your memories, your attitudes, your behavior throughout the life. We all will remember. So enjoy your money. That's all I can say. I think so. I answered, sir. Any other question?
Yes. Next question is regarding senior citizen scheme. I think for a 64-year-old like me, the best investment mix may include a combination of stable fixed income options such as senior citizen saving schemes and post office monthly income scheme, along with moderate exposure, that is 100 minus miles, that is 36%, to equity based mutual funds to generate higher return for long term, as you said. My question is that what are the best government backed saving schemes specifically for seniors that offer attractive interest rates and benefits in today's market?
Yeah, that's very good because nowadays even FDs or Pradhan Mantri, Senior Citizen, LIC, all of them have which give you 0.5% extra. So what I have noticed is recently, nowadays the good thing is all people, you all, we all in this generation, we have saved enough because we never seen so much of surplus money. But now people have started saying simplicity. So my dad used to have the annuity plan. Okay. His major issue is every October, November, you have to give the life certificate.
Existence
Okay.
certificate, yes.
And that will become a big thing. No, I don't know how to do online, mobile, jitna bhi main karu. Then he will say, no, no, you take me to the bank and get the bank certificate. So sometimes what I've realized it last few days, at least 1 or 2 years, many people, because I'm in a Bangalore, a lot of people in IT, they wanted to, they said, Rachna, I haven't earned enough, learned enough. 45-50 में मैंने 10 crore कमाए पकड़ मुझे 2 lakh per month दे I will do whatever I want. So that's a normal norm for here also. Forget it at 60, 40, 50 only people will start doing that. But simplicity is very important. How simple it is. Like I'll give you my example. I stay in Bangalore North, South, in near Meenakshi Temple, and my dad used to have the MIS, and GPO is Central Bangalore. 2.5 घंटा लगता है जाने में, 2.5 घंटा आता है लाने में. वो कहते पूरे ये तो एक दिन का ट्रिप ही हो गया मुझे सिर्फ अपडेट कराने में. So those are good, but you have to know how easy they are with the transactions, how easy you can transact with their money, checkbooks, or any of the online transfer kind of it. So anywhere you invest, even it's a government, not government and all, look at ease of service. Very important than 0.25 or 0.5% get. But yes, government is being great and they're trying to see that at least you can get FDs or RDs or Pradhan Mantri, Senior Citizen, LICs, NSCs, where you can get normally 0.5 and now it is, if I'm not wrong, it's 30,000 is allowed, 30 lakhs is allowed.
Yes.
Madam Gurunath Reddy again.
Sir,
Yes,
Am I audible, madam?
yes, yes, please.
Yes.
Next time, if your father is having any difficulty in the pension life certificate, I can assist him. I'm a military officer.
Thank you, sir, but he's no more. He just left us last year.
Okay. My next question is uh, just we discussed earlier, but same topic, different way. My friend just retired and had a large provident fund payout sitting in his bank account. On his behalf, I ask you, what are the advantages of fixed deposit versus mutual fund for retirement? He is in dilemma, fixed deposit or mutual fund.
Taking a fixed deposit with the debt funds because that is apple to apple. Otherwise, it is not. So, if we have it in a fixed deposit, so I always tell whenever you invest, there are three things to look at. One is inflation, one is taxation, another one is risk and returns. Okay. So, when I'm talking about FDs, let us say there is almost no risk. Debt fund also almost similar, no risk or very less risk. But returns, we will say, let us say 6.5%, 7%, yes. But what is the tax efficiency? That comes into picture. Because anything post tax and post inflation should be greater than zero. If I do FD, which is let us say 7%, and my inflation 10 years average is around 6%, post tax I am negative.
Yes.
So please make sure, I always say is you keep it in FD where it is not getting your tax impact much. That much you keep it. Contingency, please put it in FDs. But when the tax liability goes high, take it a capital gain. As on today, even short term capital gain is 20%, still lesser than your 30% if you are in 30% bracket.
Correct.
And long term is 12 and a half. So capital gains is a better option than FD, but FD most time contingency money and the fixed deposit not impacting your any taxation, keep it there because that is peace of mind. Because that's see somebody asked me why our parents used to do only LIC, PF, PPF, and FDs. Because if you see FDs at 90s, early 90s was giving 12 to 14% returns.
Yes.
यदि मुझे FD 12-14 दे रहा है तो मैं इक्विटी क्यों जाऊं? In FDs they used to allow only 5 lakhs as per RBI.
Yes, it is covered only.
So
As a,
now I think so for senior citizen they said they will be able to recover all. That's a very good news. And
Madam,
I
I
don't,
have a question.
yeah,
Madam, my FDs are generating uh, interest, but it is being taxed almost 30%.
yeah,
So now I don't know what is the option I have. Some people say go for mutual fund.
yes,
What
sir.
is your view? Because I find equity also I started 3 years back, but my experience is not very good. But do you subscribe that we should because what I see is that if I keep my FDs at almost 50%, because then only I will have no taxation, because for what we can earn through FDs is only up to 2.5 lakh interest, which will be not be taxable. But anything beyond that is taxable. So, do you advise I should move to mutual fund?
Three questions for you. Is it your total income is going above 7 lakhs?
It goes above 15 lakhs.
Yeah. So you're in
30%.
30% lakhs. Yeah. So the reason I'm asking it, it's not only in FD, but even FD's interest comes below 7 lakhs, it's no tax now in the new regime. Okay.
Below 7 lakhs, no tax.
It is
If your
totally.
income, total income, it can be capital gain, it can be FD
No,
interest, it
no,
can be
my
pension, it can be
income
anything,
is
cannot.
above 15. My income is above 15 lakhs, and the interest which I get about 7 to 8 lakhs, it adds on to it.
Yeah,
So
yeah.
I
So
am being forced to pay a taxation of
Heavy tax.
30%.
yes,
I
yes, yes,
want to
sir.
reduce it.
So I'm just trying to repeat again for everybody. Whatever you want a monthly income for your sustenance, please keep it in a low risk. It can be in FD, It can be. I don't know if you have annuity. I don't know if you have a rental income coming kind of it. Those things which is giving you regular, which is
Uh,
additional, please move it to mutual fund. Whenever you're looking mutual funds for an hybrid fund, think minimum 3 years. Equity fund minimum 5 years. Then
okay.
only invest. Otherwise, don't do it. I'm surprised you are saying that last 3 years your equity is not done, because last 3 years the market has done the very good. I'm very surprised if you say,
No,
but
I
don't
see. I
expect
started
something.
with a amount of round about 40,000. I spread out in the equity market. But I unfortunately picked up one company which, even though I picked it up at IPO stage, but it never increased. It's still down. So my whole portfolio is down for last 3 years.
So request to you, and very good example, sir.
Uh,
Please don't go on direct stocks.
okay.
All of you, please, it's better, because you may not have so much time to go through all the research. Don't take it now. Last few days I've been saying lot of scams also happening on direct stocks, and people say I'll give you 20%, 30%, so many things. Take a mutual funds, their fund manager will take care.
Okay.
It is
Okay. Now,
okay
on
to take.
mutual fund, I wanted to know there are lots of options, but I was looking at a component which is giving, debt come equity. So, debt, I want to keep it 60% and 40% equity. How good is that decision?
You can do, sir, but hybrid funds are normally in a 65% is the equity and 35. And
Uh,
if you want 60/40, then you have to take a pure debt and pure equity in the same ratio. But that is
Okay.
always good to take it, and then you can do SWP from the debt funds.
Acha. The second thing was that now there are some fund which is having debt component, equity component, as well as gold. Are you aware of anything like
Multi-asset.
that?
Multi asset. So there is a funds like they call a large cap, which is the bigger companies, which is 1 to 100 ranking as per SEBI. 101 to 250 is called mid cap, and 251 to 500 is called the small cap. That multi asset can have those. They can have the gold also, and debt funds are wherever. Of course, there are many different types of debt funds. It can be bond, it be overnight funds, it's a liquid funds, ultra short term funds. But indirectly, you think like a FD kind of it. Those funds it is, so you can take a combination of anything. We believe that next few years in India will be very good. Large and the multi-cap is what we are doing. If you don't want much of a risk, sir, take it a aggressive hybrid funds, which is 65% equity, 35% is the debt. So good thing
Oh,
in hybrid funds are taxation comes as a equity.
okay. This my last question. Sorry, I'm asking
No
so many.
problem.
Uh, I just thinking of going for a SIP fund, like contributing 10,000 every month. Uh, I also actually I want to keep my daughter who is just 24 years old. I want to gap it for 6 years because she's studying, she's doing on research. She has still has got a lot of time. So, how good is SIP fund? I'm sorry, I'm not asking for a for you to advise me which SIP fund. I just wanted to know how good is SIP.
SIP is always very good. What is SIP? Indirectly, previously, all of you must have done the RD. That much
Yeah,
money you put it in RD, after 3 years I'll
recurring
get. The
deposit.
difference
Yeah,
was that in
yeah.
the RD they will declare before only this is the rate for an RD. In a
Okay,
SIP they don't declare the rate. They will tell when you sell only what is the rate. Otherwise the fundamental is the same. SB
okay,
account से जा रहा है और फिर इकट्ठा मिल जाता है. But SIP normally
okay,
used for the people who is getting a monthly income. Okay. So when you
okay.
have a monthly salary, instead of
Uh,
so much doing, it used to go now. So
okay,
I don't know if you are earning, sir. It is SIP is very good. I am doing SIP for last 30 years. But if it is not, then people call STP. So you put one
okay,
lump sum money in debt funds, and वहां से weekly या monthly
okay.
equity में जाता है. So that is very good.
I thought to create a fund for my daughter as a SIP, which is a growing fund, instead of keeping an FD, which with the interest rate. inflation, is not going to help. The time value of money indicates that FD is of no use. But giving an SIP is also growth oriented. It will help the fund to grow. So that's why I asked this question.
Perfectly. If you have a pension which you are not able to do, SIP is the best option, sir. Please go ahead.
Okay, okay.
You can
Uh,
take a large cap
Can
or
I
a
ask a
multi
any,
cap
question?
now. It's good.
I'm
Yeah.
asking off the record, but are you aware of any good SIP fund? I mean, I can go to the website and see it, which is doing better. But you have any advice for a SIP fund?
So normally we don't give 1:1, but when you're calling me, I can give it across. Otherwise, Shrikant sir is a better option.
Yes, I will
But
give.
I can give it across. We do a ranking ourselves. I can give it to you. I can,
Okay,
otherwise, Shrikant sir will be happy to give.
Yes.
okay,
Okay.
okay.
Uh, now,
Thank you very much.
huh, thank you,
Welcome.
sir. Now, last question. That is about legacy, inheritance, death, etc. So I myself consider big picture view of allocating my retirement corpus to three broad heads. One is for myself and my wife. Second is for charity, religious purpose, and third for my two children as a legacy. So my question is that how should I know about inheritance and estate planning? Because this is also concern of senior citizens.
Okay, first of all, let me give from again my own parents' example. First, I
Yes.
want all of you to make sure your Aadhaar plus passport, all names are correct. Okay. Most of us, whenever I'm doing this legacy issues, किसी का पैन में सक्सेना, my maiden name is Saxena. It is like my dad's name is Rasheshwa Sai Saxena, R.S. Saxena, Sahaya Rasheshwa Saxena. Three different level it is. It's very, very painful to change that time, notify and not getting. Okay. So please make sure somebody have a extra A. My mom name is Aruna Saxena. Extra A has come. Not able to do it. So first point in the thing is try to make it that clear. Make sure your all bank, Aadhaar, PAN, and if your passport name is correct. Second is, I always believe this is my belief, there's nothing wrong to have just plain paper, write yourself, tell whoever is a confidant for you, spouse or a kids, that I have written this, and just sign it with two witness. You don't need to do registration. I normally don't ask any of my customer below 10 crore to do it because the time, money, energy, and cost of writing the will is not worthwhile. Okay? Writing in a plain paper and your signature with the witness is as good as a registered will until or unless it is contested. Like I'm just giving example. I'll say that, okay, I want to give an extra 10% to my daughter, not to my son. Or I wanted to not to include my kid. I know few customers who has given 100% to charity and they know they may be contested. So I have to do registration. If you feel not to have those, just write it in a plain thing and make sure somebody at least know that you have written the will. If the will is not written, normally as per the court of law, it is a Hindu law, it goes equally. So most of the time we called as a mirror image view. Like if something happens to me, I have written everything to Anil's name. If Anil's happen, it will come to me. If I have not written, it will go to the all the people, both the kids and the spouse. But if your mother is there, mother also will be in the same path. Okay. So there are few cases are going on which I'm trying to help because mother don't want it because she says it's not my money. But other kids are saying, no, mother, you take it and give it to us. So will is very important in that tree. Second thing is will is sometimes very important. In India, it's not so common. It's coming soon. I have few customers who doesn't have kids and who have a kids, they are not in India. So they called a living will. Okay, living will concept is in US very high. But now they are saying they told Rachna, if I am in a hospital, how long you can, because I am going to be the financial for them, because there's no kids. Nobody knows who will be the person who will be writing and signing and everything. He said till X amount you can take me to the ventilator.
Morning, both of you, and a
Good
lot of
morning.
learnings are there. See, I am now currently 4 months back I retired, and I have this medical insurance I have lined up already for me and my wife till our son. And also, no, currently I am just streamline my income based on only SCSS and few FDs. And this has been split between me and my wife, so that no, I just would like to be below 7 lakhs. That's how we have done it. And the CA was guiding us on this issue. Now, currently, no, I have some amount left in NPS, which I thought that I will switch over to the annuity mode after about 7 or 10 years, depending upon the requirement. And balance things and everything, I have put it in STP through STP mode into hybrid funds, like what you just told. One is that ICICI multi-asset,
BAF,
like
HDFC.
that. I have put it in 5 hybrid funds. And that is also split between me and my wife. Now, what I am now just on the dilemma is now regarding the current annuity is one. When if I go for joint life and between me and my wife, joint life option in NPS, one of the carrot which is now being enticing is now 7.6% or so is the annuity rate by HDFC. Okay, which is a very, very mouth-watering one. If I'm going to opt for it for 40% of my S1 and balance 60% if I'm opting for monthly SWP, which will be tax-free from NPS. And if I'm going to opt for it, then mostly no, I will never be worried about taxation issue. Plus, I will be switching over to a hefty, good return. About a 1 crore I have, of which 40 lakhs, if I'm going for this one, I'll be almost about 24,000 rupees I'll be getting as a pension and balance as a SWP. Or this is one side of it. Or should I just leave it as a 10 years के बाद 7 plus 10 years के बाद NPS को switch over करना है. This is what my dilemma is. I think I told you very clearly. That is now NPS amount. Initially,
I
I
understood
planned
the
as
question.
7 plus. Yeah, please.
So my answer to this is, because it's a very common question for us also. The answer is, the first time I told you what is the liquidity you have to do. Because if you continue with an NPS, it's a fixed. You cannot remove the money. You will get only monthly money. Okay.
Yeah.
So whenever you are having, let us say, 1 CR and 60 go and 23K comes per month, but your liquidity is what is the percentage you have in a, I don't know your overall percentage of portfolio amongst between you both. Do that. If you have a 50% of your liquidity, please go ahead with the lock-in NPS. It's good. Otherwise, you make sure your liquidity should be there. But otherwise, the
Okay.
option of the NPS is good.
No. The thing is that now with the reducing interest scenario, the annuity rate, I remember the annuity rate somewhere around 18 and 19, 2018-19, where in the range of 5 to 5.5%, which today it is available in upwards between 7 to 7.6% for the same joint life scenario. There is a big bump up of about 2.5% is there, which is not a small amount. Okay, now given another option of the tax-free component of the 60%, which will come to me, and it will be a luxury for me. 60% of that one coming for 10 years is a good amount actually. So the current FDs and everything also I'll switch over to through STP into hybrid. So this is what
Your
putting
thought
in.
is correct. Actually, you can do that.
Yeah, so that
Putting
means
into FD into STP and take the tax free at the higher interest, because we expect the interest low will go down also. It's a good
yeah.
option.
Yeah, it will come down to 7.5, 5.5%. Eventually, down the line, after 2 years down the line, it will eventually come down. So that is okay. Thank you. Thank you.
तो मेरे ख्याल से सबके डाउट्स बहुत से क्लियर हो गए हैं और टाइम भी हो गया है.
Thank you, everyone. Thank you, Rachna ma'am, so much.
Thank
Srikanth sir.
Thanks a lot. Nice. Bye-bye.
थैंक्स
Thank you,
और
ma'am.
Bye.
Very nice.
Thank you.
और अभी भी कुछ आगे डाउट होंगे या पर्सनल
आप
डाउट
बता
होंगे तो
दीजिए।
आप सुकून अनलिमिटेड से मुझे कांटेक्ट कर सकते
Yes, and we can share Rachna's contacts and details with you.
Okay.
100%.
हैं तो
Thank
Thank
you.
you.
सबका धन्यवाद
Thank you.
थैंक्स टू ऑल